Hello everyone, Jesse Webb, Traders Pro. Market conditions remaining mildly bearish in a bull market, just continuing to slide right here, getting to another potential support location that we'll talk about. Again, this overall uptrend starting to fade. Certainly here we're looking at this uptrend and this counter trend. We're at a pretty significant support area. We're just not seeing any kind of bounce. Anytime the market wants to make an attempt higher, the Fed seems to smack that down. So we're seeing continuation of that trend. Momentum indicator starting to work our way back towards that bearish trend. That's why it's still mildly bearish. If we move down into this bearish trend, we're going to see things tick down to another bearish trend. We're seeing breadth slide again significantly. We're also seeing sentiment starting to weaken as that is starting to roll back over this way, or this trend is starting to move here. And that hasn't happened for a while. You can see, if I can see this time frame right down here. This is August, so summer months right through here kind of peaked out, starting to roll over. So we could see some increased fear and some increased volatility in the markets right here. And buy-sell ratio is extending back up again, and still in that weak state where we've got red above green, and that is continuing to prove to be the overall bias and trend currently here in the short term. Definitely an indicator to be paying attention to. 0.21 on the buy-sell ratio. That means we just have a whole lot more sells than buys. 3,000 almost for 600, so 3,000 stocks in downtrends versus 600 in uptrends. That's why the red line is above the green line, and the bias is to the downside. Currently, S&P 500. Let's take a look at that chart and look at some of our zones. We're approaching this next zone, this 425 on S&P 500. We sliced right through that 431 yesterday or 2 days ago, and then yesterday we had an intraday rally, and then as soon as the Fed started talking and essentially indicating that they're okay with rates where they're at and potentially even higher or staying right here for a length of time, market didn't love that and continued to sell off pretty aggressively and pretty fast during the day. But this support area, this 425, we'll see if it holds, and it certainly needs to. We could retest these lows, these 420 ranges, and still have this overall uptrend intact from here to here. Because we've got just this massive zone now of potential support that the markets could hold up. We just can't seem to get any momentum back to this side. It really made an attempt, and then it's just started to continue to weaken right here. So that does say something about the market. So we've got buy-sell ratio bearish, but that's also been for a length of time. We'll watch to see. Really, this, I've mentioned this before. This is a pretty bullish-looking pattern. We have this uptrend retracement, uptrend retracement. That typically sets up for more upside. But if this ends up being the overall trend now, we're just getting resistance. We're getting these continued series of lower highs, and that could ultimately be what the market is starting to do, is starting to reverse this overall one-year trend or beginning a new downtrend. That's kind of the limbo that we're in right here. Is this still the uptrend currently, or has this begun a new downtrend? And we're seeing on this one-year chart some of these major zones. This is a little bit wider zone between the 236 and the 382. That's still not a really deep counter trend for a one-year time frame. That 50% zone can certainly come into play, and it's all the way back down here. And that if we slide through these levels and even get through that 422 range, has got to hold. Otherwise, we're headed for that 411 range on SPY. So those are kind of some areas to be focusing on. You can see how this resistance area held up. That's not a good sign. That's not a sign of a real healthy market right here when you're seeing these. Now what we have is this support area that was a support area here is now, as it was bouncing and heading higher, it just moved through that. Now it dropped lower, and now it retested that area, and it failed. And and is now working its way this direction. So bears are in significant control right here, and that may not change anytime soon unless we get a little bit more confirmation off of this chart pattern, which we're just not seeing. And internals are still quite weak. In fact, if we look at the sectors indicators, we've got sectors really across the board now. Yesterday, I think we had 3 or 4 in the hold range as well, in addition. So now we're seeing more of these sectors moving back down in that downtrend sell zone, and that's going to that just is an indication of where the market is currently, and that is weak. Some weakness here. We've also been talking about commodities. And these two now are the leaders, where we've got oil and gold are at the higher ranks in that ETF world. We've got USO, which has been having a nice run up, continuing here. Let me just move to this perspective now. So gold's getting a move, and now in opposite correlation to, forgive me, opposite correlation to the market. Oil is moving higher, gold is moving higher, equities are moving lower. That's kind of the current trend that's happening right there. So let's talk about that. Gold and oil, those two locations. If we go into sectors, and if we look at the sector scan, individual stocks to look for inside of that oil and energy, you can go with this 113 level. This top stock has had a split, so it's had a big gap that needs to be updated. You can see that there. I would just kind of bypass that one until that's updated. MTRX. So this top list of stocks right here are going to be the ones, if you're looking for additional stocks right here. Again, the market conditions are just not, when they're weak like this, you're going to get a handful of stocks that are working. The ones that are working are going to be in some of these stronger sectors, and that's the idea of looking for what's working in the current market environment, and that's oil stocks. And these are the top oil stocks right here. You can see their current trends. You've got TDW. You've got quite a good looking list of stocks inside of that group currently. Muscle stocks group is getting smaller and smaller. We're just not getting very many buy signals right now, and that's because everything is either in a sell zone or headed that direction inside of that hold range. So pretty weak market conditions, certainly warranting some caution right here, but individual stock picking with individual sectors that may be working like oil right now, and even some gold stocks. If you go over to the muscle ETFs, look for some new buys right here. We're seeing, we do pull in the inverse ETF. So this is a leveraged inverse ETF, which is essentially negative. If banks are dropping, it's a bank sector. If banks are dropping, this is going to go up. If it drops by 1%, this is going to go up by 3%. So if you're looking for ways to be able to kind of diversify the risk of individual stocks, ETFs are a nice way to do that, and it's a nice way also to be able to play different directions, because this is going up when the markets are going down. So it's a very simple buy signal to be able to execute in your brokerage account and be able to hedge against any downturn. So if banks drop off a cliff, this thing is going to really rally. So those are some things. And so you can see that current trend. This is a current uptrend of what banks are looking like on the opposite side of things, and they're dropping. So we're definitely seeing increased volatility. We're seeing increased momentum to the downside, and these are some additional ways to be able to focus on that direction. Real estate also. We're seeing, real estate just getting pummeled because interest rates are continuing to move high. This muscle ETF PFIX right here, you've got this really strong move in interest rates. So let's look at that real quickly, because we've got the TLT, which is that long bond, 20 years plus, making new lows, at least on this 6-month time frame, really new lows in the last years and years. It's just continuing to drop, and this is becoming an unsustainable location. Eventually, we are going to get a snapback here on bonds, and I think the market would welcome that. At this point, who knows, right? The markets are just doing what they do. In fact, I just saw an article about a correlation that this year in the 60-40 portfolio split between bonds and stocks was the highest level of non-correlation. They both have been dropping. So if you had owned both stocks and bonds together, this has been one of the toughest 12-month periods for that strategy in a long time. Not surprising. Let's again back to that muscle stocks group. We've got a few. The Taiwan Semiconductor having a bounce here off that 50%, that 1 year time frame, and probably an earnings report since it had a gap right there. Decent looking stock, but again in a riskier market right here. We're also seeing oil and energy, ticker symbol E. This is an ADR, which is a depository receipt, which is basically an international company traded in the U.S. And uranium, UEC. This is a nice looking chart pattern here. $5 stock, mining stocks. I think it's continuing to look for that commodity, that mining area with gold and oil and silver and uranium and lithium and stocks that are working towards that direction. UEC is an interesting one to look at because it has had a really big uptrend and then a really tight consolidation. That'll do it for today's update. If you don't have full access to the site and software, you can sign up with the link below, and we look forward to having you. Have a fantastic day today.